The bulletin read like a battlefield report. Markets in chaos, traders in freefall. They chased wealth through screens, charts, and endless leverage. But when the candles turned red, the winners counted profits while others zipped into body bags. This isn't finance anymore, it's obsession turned fatal. Behind every green candle is a dream. Behind every red one, a downfall. They call it a market correction, but on October 10th, 2025, it felt more like a massacre. In just 24 hours, nearly $19 billion was erased from existence. Bitcoin crashed below $109,000, clawing its way back only after millions were already gone. 1.6 million traders liquidated, their screens flashing red before fading to black. Somewhere, a single wallet quietly profited $190 million, while another man, Konstantin Ganich, was found dead behind the wheel of his Lamborghini. Two sides of the same market. One fueled by information, the other consumed by desperation. This wasn't just another crash, it was a revelation, exposing how greed, leverage, and silence can cost more than money.
Friday wasn't a correction, it was a wake-up call. In just hours, $19 billion vanished, marking the single largest liquidation since Bitcoin's birth in 2009. But this wasn't fear, it was automation, gone wild. Leverage positions exploded, cascading through exchanges like falling dominoes. Oracles glitched, feeding inaccurate prices across platforms. On Binance, a mismatched price feed triggered a flood of liquidation orders, and before traders could even blink, bots sold faster than human logic could respond. Bitcoin crashed below $109,000, dragging Ethereum and Solana into the abyss. The same algorithms designed to make markets quote-unquote efficient had created a self-destruct loop. It wasn't emotion, it was panic coded into algorithms. We've seen this before, in March 2020 when Bitcoin plunged 37% during the COVID crash, and again in May 2021 when $8.6 billion vanished overnight. Yet, every time we call it unforeseen. But is it really unforeseen? When Wall Street whales and quant firms can see liquidation clusters hours ahead? When insiders quietly de-risk while retail traders chase green candles? What if these crashes aren't random? What if they're orchestrated resets, engineered liquidity sweeps that move money from the impatient to the informed? The charts may look mechanical, but behind the code lies intent. The trigger? A sudden 100% US tariff on Chinese tech imports, a move that blindsided even Wall Street analysts. Within minutes, global markets convulsed. Stocks dipped, bond yields spiked, and crypto absolutely imploded. Traders rushed to hedge, but there was nowhere to hide. Liquidity evaporated across major exchanges. Bybit, Binance, and OKX all saw their order books thin out to near zero. Exchanges froze, gas fees spiked, and wallets stalled mid-transaction. Then came the domino effect. Over-leveraged positions began collapsing, one after another. What started as a tariff headline became a chain reaction of liquidation warfare. AI bots detected panic and started shorting aggressively. Price mismatches across oracles amplified the chaos. Bitcoin didn't just drop, it free fell below $109,000 before bouncing back. We've seen echoes of this before. In August 2015, China's Black Monday wiped $5 trillion off global stocks. In March 2020, a single panic wave slashed Bitcoin 37% in a day. But this time, it wasn't a virus or a bank run. It was a perfect storm of code, policy, and fear.
Amid the chaos, one wallet stood out. While millions watched their portfolios evaporate, one trader's balance surged by nearly $190 million in 24 hours. The timing? Too perfect to ignore. Moments before the market began its nosedive, this address opened massive short positions across multiple exchanges, Binance, BitMEX, and OKX among them. Then, as Bitcoin collapsed below $109,000, those shorts exploded in profit. Within hours, they were closed flawlessly, seconds before the rebound. No errors, no hesitation, just precision. Was it luck? Was it algorithmic genius? Or was it something darker inside of foresight? Blockchain data shows coordinated movements between wallets seconds before the cascade began, almost as if someone knew the liquidation engines would trigger. We've seen this pattern before. In May 2021, when whales liquidated $8.6 billion and one fund pocketed $110 million by shorting the dip. The same story repeated in June 2022, when 3AC imploded and anonymous entities quietly profited. Could this be the new form of financial warfare where power lies not in capital but in data access? Because if one wallet could see what millions couldn't, what does that say about the fairness of a market built on transparency, yet ruled by those who can predict the panic before it begins?
Not everyone walked away rich. Konstantin Ganich, a crypto investor once praised for his precision, his boldness, and his relentless belief in the market, didn't survive the crash. He was found lifeless in his Lamborghini just hours after the $19 billion liquidation storm. To some, it was a tragedy. To others, it was a warning. Friends said he hadn't slept in 48 hours, glued to screens as his positions bled red. In his last message to a private trading group, he wrote, "This can't be happening." But it did. His portfolio, once worth millions, was liquidated within minutes, and with it his confidence, his identity, his purpose. This wasn't a market correction for him. It was an emotional collapse, the breaking point of a system that turns human beings into risk machines. He wasn't alone. Since 2021, at least 14 reported cases of trader suicides have followed major crypto crashes, from Terra Luna's $60 billion implosion to FTX's $9 billion wipeout. Behind every price chart, there are people chasing hope, validation, and escape. And when that hope vanishes, reality rushes in like a tidal wave. The story of Konstantin isn't about greed, it's about attachment, the way the crypto market seduces you into believing profit equals purpose. How many others stare at their screens right now watching digits dictate their worth? How many more Konstantins will the next crash create before we learn that mental stability is just as fragile as market stability? Because behind every liquidation candle, there's a human being who believed they could time eternity and lost themselves in the process.
Crypto isn't just an asset class, it's an addiction dressed as ambition. Every chart flash, every notification, every pump, it rewires your brain. A hit of dopamine here, a rush of adrenaline there. You start chasing wins, not wealth. The screen becomes your stage, the market your mood regulator. In 2023, a study from the European Journal of Behavioral Addictions found that nearly 37% of active crypto traders show signs of compulsive trading behavior. That's not strategy, that's dependency. Think about it. When was the last time you checked Bitcoin's price and felt nothing? For many, the constant volatility becomes their normal. The highs feel like validation, the crashes feel like punishment, but both keep you hooked. It's the illusion of control that feels it, believing you're one trade away from freedom, even as your peace erodes trade by trade. We tell ourselves we're early adopters, but sometimes we're just early casualties of an economy built on endless stimulation. Crypto promised liberation, but what if it's quietly becoming a digital casino for the intelligent, one where the odds favor not the disciplined, but the addicted? And if that's true, who's really profiting from your obsession?
This isn't the first time we've watched the world burn in red. In 2021, $8.6 billion vanished in a single day as over-leveraged traders bet on forever bull runs. They called it just another dip. In 2022, the Terra Luna collapse vaporized more than $60 billion in value, and with it, the dreams of an entire generation of retail investors. People lost homes, marriages, hope. In 2023, the FTX implosion shattered trust itself. Over 9 million users left stranded. Not your keys, not your coins, suddenly became more than a slogan. It was a eulogy. And now, 2025, the biggest one yet. $19 billion gone in 24 hours. Every cycle ends the same way. Greed builds, leverage piles up, algorithms take over, and then the collapse. We say never again, but the market always finds a new drug. DeFi leverage, AI trading bots, copy trade apps, new names for old temptations. The difference now, each crash cuts deeper, not just into wallets, but into psyches. History doesn't just repeat in crypto, it compounds, and with each cycle, the human cost grows deadlier.
Maybe the October crash wasn't a glitch in the system. Maybe it was the system showing us what we become. Every trade, every chart, every liquidation wasn't just data, it was human impulse coded into numbers. We built machines to make us rich, and they learned our weakness faster than we could learn restraint. In 2008, it was subprime greed. In 2022, it was algorithmic arrogance. In 2025, it's leverage disguised as innovation. The technology evolves, but our behavior doesn't. Statistics show that nearly 80% of traders re-enter the market within 24 hours of a loss, not because they have a plan, but because they can't stop. So was the crash mechanical or psychological? Was it lines of faulty code or flawed human emotion repeating itself in digital form?
The charts will recover, the candles will rise again, but the human cost, that never fully heals. For every winner posting profits on X, there are thousands silently rebuilding what the market took. Crypto was meant to level the playing field, to give power back to the people. But power without restraint becomes poison. Since 2021, over 14 million traders have been liquidated across global exchanges, not because they didn't believe, but because they believed too much. Freedom was supposed to mean choice, yet for many it became compulsion, chasing one more trade, one more candle, one more chance. Maybe the real revolution isn't on-chain, maybe it's internal, learning patience in a world addicted to speed. If this story resonated with you, share it, not for hype, but for awareness. Because in this market, survival isn't about profits, it's about perspective.
And for the record, I'm still optimistic about the future of crypto. That's why I'm betting everything on Bitcoin for the next 21 years. Click the card above to find out why.